Welcome to SBA loans at RemoteLO. Our goal is simple: uniform, compliant, and fast deals every time. The SBA unlocks financing a normal bank wouldn't offer on its own. We're talking up to 90% LTV, 25-year terms, and no balloon payments. The government backs these loans, which means less risk for the lender and better terms for the borrower. Let's get into it. 3 programs to know cold. The 7A goes up to $5 million and can be used for almost anything: working capital, equipment, real estate, even acquisitions. It's our most flexible product. The 504 is strictly for real estate and fixed assets. It's a combo deal. The bank funds 50%, the SBA funds 40%, and the borrower only needs 10% down. Then there's the SBA Express, capped at $500K, but with a 36-hour approval. Fast, streamlined, and perfect when speed matters. Before anything else, the business has to qualify. It must be a for-profit U.S. business that meets SBA size standards. We check that using the NAICS code, the business ID tag that tells the SBA what industry they're in. We also have to pass the credit elsewhere test, proving this borrower can't get these terms from a regular bank without SBA backing. Every owner with 20% or more personally guarantees the loan. And know your hard ineligibles cold: nonprofits, gambling, speculative real estate, and anyone with a prior federal default are automatic stops. 3 clearances before you go any further. Form 4506C, the no-lie form, pulls tax transcripts directly from the IRS. Any discrepancy between what the borrower told us and what the IRS has on file needs to be addressed immediately. SAM and K-Vires is the baggage check. It screens for prior federal debt defaults. A K-Vires hit stops the file until it's resolved. Finally, the SBSS score, the SBA's own business credit score. You need a minimum of 155. It looks at payment history, financials, and the owner's personal credit. Get all 3 cleared before moving forward. 2 things we're measuring here: cash flow and character. DSCR is our bill-paying power check. Divide net operating income by total debt service, and you need at least 1.15x, meaning the business earns 15% more than it needs to cover all its debts. And this is global. Personal obligations count too. For character, Form 1919 is required for every owner with 20% or more. They disclose criminal history, bankruptcies, defaults, and any prior SBA involvement. Collect these early. A missing or unsigned 1919 stops the entire file. 2 more pillars: collateral and equity injection. On collateral, pledge everything available. Start with business assets: equipment, inventory, receivables. If those don't fully secure the loan, we move to real estate and home equity. The SBA won't decline purely for insufficient collateral, but we must take whatever is available. For equity injection, skin in the game, the borrower typically puts in 10% of the total project cost. Every dollar must be documented. Bank statements, gift letters, sale proceeds, whatever the source, prove it. And borrowed funds don't count. No credit card advances, no unsecured loans. 3 steps, every deal. Step 1 is intake. Collect the big 4 before you touch anything else: 3 years of tax returns, the personal financial statement, a full debt schedule, and Form 1919 for every qualifying owner. Step 2 is analysis. Write the credit memo. This is the story of the deal. Cover the business history, DSCR, collateral, and any risks with how you're mitigating them. A strong memo is your argument for approval. Step 3 is E-Tran, the magic button. Upload your complete package and E-Tran issues the official SBA loan number. No loan number? No deal. Compliance protects the guarantee, so take it seriously. KYC means verifying a government-issued photo ID for every borrower and guarantor, and confirming the business is real and legally registered. Watch for red flags: mismatched addresses, inconsistent history, unusual ownership structures. If something doesn't add up, dig in. Form 159 covers fee transparency. Anytime a broker, packager, or referral agent is being paid, it goes on the 159, itemized and signed. The SBA caps allowable fees. Hidden or excessive compensation can cost you the entire guarantee. No exceptions, no shortcuts. You've got an approval. Now, don't fumble the closing. The SBA authorization is your golden roadmap. Read every condition line by line and check each one off before funds move. For insurance, you'll need life insurance on key owners assigned to the lender, hazard insurance on all property, and flood insurance if any collateral is in a FEMA zone. Collect certificates early. Missing insurance is the most common closing delay. For any real property collateral, order the environmental report early. Phase 1 is a historical and visual review. If it flags anything, Phase 2 means physical soil testing. Environmental issues can kill a closing. Don't leave it to the last minute. Everything in this training comes back to one thing: the SBA guarantee. It's the SBA's promise to cover 75 to 85% of the loss if a borrower defaults. That's why lenders do these deals. But it's not automatic. It has to be earned through clean origination and complete documentation. The SBA audits files after closing, and if they find incomplete paperwork, undisclosed issues, or policy violations, they can deny the claim entirely. That means the lender eats the loss. Clean, complete, fully documented files are your only protection. Every bullet point in this training exists to make sure that guarantee holds. Protect the file, protect the guarantee, protect your commissions.